So we've got our panel. I'm going to run the mic. You've seen the presentation, so all the questions that have gone through your head you can now ask, and then we'll give it to the panel. Okay, so do we have a first question for the panel?
Hi, this question is to Niki from Counterparty. You mentioned that your system can also act as an escrow agent. So I was wondering how delivery versus payment transactions can take place.
Explain delivery versus payment transactions real quick.
The cash is received at the same time as the security.
Oh, right. So, in Counterparty, you're basically dealing with two digital assets, and the vast majority of the assets, apart from Bitcoin itself, can be escrowed by the Counterparty protocol. So, if the two pairs are, if neither of the pairs are Bitcoin, then the protocol can just simply escrow both sides of the transaction. And if one of the pairs is Bitcoin, then the protocol will escrow the side of the transaction that's not Bitcoin, and then wait for the Bitcoin payment, and then swap over the other asset. Does that kind of make sense? Mm-hmm. Cool.
You must.
Stephan from Ethereum. I was wondering, is there any way to mitigate malicious software that's uploaded to Ethereum at all, or once it's there, is it there for good?
Okay, what do you mean by malicious, first of all?
So software that could potentially interfere with other programs uploaded to Ethereum.
They can't, no, so that they can't really interfere in the way you describe. The reason for that is that every time a contract runs an execution cycle, it costs the caller of the contract to have that execution cycle takes place. And we call it gas. It's a unit of value that represents how much burden the contract represents on the network. So if the worst you could think of, for example, would be an infinite loop. That would be the worst for the network, because obviously, if you pay a lot of money to run this infinite loop, then that infinite loop does run. But if you do run out of money, which you probably will, then that problem goes away. So that's the worst possible attack on Ethereum, is you spend a lot of money to do something that brings you no value, but makes the miners of the network really happy because they benefit from the funds that you're pushing to the contract to execute it.
But could it not, running an infinite loop for a limited period of time, could that not be profitable if you're trying to counteract an action from another program?
The gas limit, which is this unit of value I was mentioning about, is set really, really high. So it would cost you a fortune, because you would need to ensure, first of all, you need to be aware at which point to attack. Then you would need to overwhelm the network with requests to call contracts and send very high price gas to those contracts, so that all miners decide to run your transactions and no one else for that, say, block of 10 seconds. So the resolution time for, by the way, for Ethereum is 10 seconds, not 10 minutes like it is on Bitcoin. So basically, it would be financially unviable. I can't really think of a scenario where it would make any sense.
Just a general one, really. How do you see Bitcoin as a currency in comparison to existing currencies playing out, say, over the next 10 years, in terms of importance?
Well, I guess it depends. I mean, I view Bitcoin as a little bit like gold, and I think that Bitcoin will develop in a way as a store of value and as a reserve currency for all the 2.0 applications. And I think that as technology develops, it will be more in use as a payments mechanism. But I think that at the start, it will be more of a store of value sort of currency, and it will acquire that. It's decentralized free market money like gold, and so people who believe in it will hold it like gold outside the existing financial system, and that, I think, will be the first use case, and technology will lead Bitcoin to be developed as a payments mechanism. That's how I would see it. Paul?
Yeah, no, I agree. I don't think we'll necessarily all be using Bitcoin anytime soon, or even maybe in 10 years. I think it fills a niche role in certain more likely in underdeveloped economies. I think you're seeing a lot of action in the Philippines, for example. There's a huge remittance market out there. I think $35 billion a year remittance market from people sending money back home. So it fills those roles. But again, and we're seeing that presumably there's a lot of interest in Argentina, because compared to their local currency, Bitcoin is actually quite stable. But then a lot of these and people, there's a project called BitPesa, which is based in Kenya, again for remittance for migrant workers to send money back home. But these networks need they need in points and exit points as well. And in some of these underdeveloped economies, the infrastructure in terms of the internet might not be there yet. But then in Africa, with Kenya, you've seen that they completely skipped the banking system and the growth of the internet and just went straight to mobile communications. So it's possible that it could take off. But I think, as Adam says, I think it needs to gain trust as an alternative asset class first, and then it has the added utility that you can use it as a currency if that becomes globally accepted.
Yeah, people sometimes draw the analogy with Napster. They say, Bitcoin is the Napster of money, and I think it's a false analogy. I think because I think e-gold was the Napster of money, and Bitcoin is the BitTorrent of money, in both in where it comes in the development cycle and in the kind of structure of what it is. It's dispersed, decentralized, and so on. But just like ultimately, BitTorrent for music is not what mass markets use. Ultimately, they use Spotify or similar offerings. I think Bitcoin is the same kind of thing, that it will initiate similar products from established market players.
The Bitcoin analogy is quite interesting, really. I mean, that was heralded really as decentralized, free transfer, but it hasn't worked out that way. The Spotifys, the iTunes, they've won the battle. So why should decentralized blockchain ultimately beat the centralized financial system?
Yeah, no, I'm not saying it will. I'm saying that.
I put it to them.
I think BitTorrent will never go away. It will always be in tech circles and on the fringes, so to speak, of music listening. It's there, but its big achievement was making Spotify happen, because it increased consumer expectations of how music should be consumed. And so it's the same. People now ask, like, why can't they transfer money instantly to Kenya at low cost? I mean, and it's ridiculous that they can't. And Bitcoin puts that proposition to the banks. It's like, that we have the technology. We're able to do this. It's just they're price gouging at the moment because it's such a shallow market.
So you're saying it could just force the banks to make their own systems more efficient?
I mean, there are like 5 broad scenarios, but if I had to bet, that's the one I would say. Bitcoin will be a catalyst for change.
It's an external shock to the system that needs to adapt.
Yeah, absolutely.
So it has a relatively short-term life?
No, it has a long-term but fringe future. But that's, I mean, obviously we all, you're asking us to gaze into the crystal ball, but if I had to guess, I would say it won't go away, just like BitTorrent won't go away, but it's not about to turn into a mainstream hegemonic currency.
Well, I don't know. I mean, I have to say I sort of disagree, and I suppose I'm on the other side of this from Lúí. But basically, why would it replace a centralized system? Because the centralized system is vastly over-leveraged, extremely fragile, and has a lot of insolvent centralized entities that, if they were to fail, would take the entire system down. And that's the point of a decentralized network, that if one node fails, the whole system survives. Whereas the centralized system has Deutsche Bank and JP Morgan, and they have $55 trillion balance sheet, self-balance sheet, notional derivative liabilities, and they're at the center of the payment system. And it's difficult for me to understand why banks that are leveraged 50, 60, 70, 80 times are at the center of the payment system. I don't understand that, and I don't see that that's necessary. And so, sort of, as you were saying, Bitcoin provides a challenge and says, why don't we have a payment system that leaves out these over-leveraged, centralized, insolvent entities and replaces them with a decentralized payments network, which works perfectly well, where we don't need any of these systems. And in the same way, it allows the transfer of value without going through these centralized trust intermediaries. So that's another reason for the replacement of the entire centralized system, which is the promise that Bitcoin has. Whether it's Bitcoin or Bitcoin 2.0, I think that is the promise of Bitcoin.
So quick question. Bitcoin has probably taken 5 years to stabilize. All the bugs have been worked out. When we talk about smart contracts, which have a huge amount of promise in terms of the capabilities, characteristics that they could provide to the financial markets and non-financial markets. How much road testing are we talking about? If you guys were, look into the crystal ball again and say, when would smart contracts be capable of doing very high value transactions in a very secure transactional manner, which they potentially could do today? So I'd be interested in your opinion.
Well, from Counterparty's point of view, I suppose we kind of do implement some smart contracts. We've got some basic binary options, some basic costs for different style contracts. And if you were to look at the software that actually sits behind those contracts, I think you'd be surprised at how simple it is. And, the network is growing. We're doing maybe 1,000 transactions a day, something like that. So, confidence is building, I think. I do take your point that it does take time to be fully confident, but at least if your software is simple, I think that's an advantage.
1-2 years, would you say? What would your estimate be?
Well, for me personally, to be able to trust it, I'm ready now, because I can go and look at the software myself and I can say, okay, that's what it does, fine. For anyone else, I guess they're just going to have to wait until somebody that they trust has made that same conclusion.
Yeah, I mean, similar comments to Niki. When now? Why? Because I can look at the code. Then the question is, of course, but my mom can't look at the code, so what does she do? So if you remember the screenshot that I put on the screen earlier, there was a little, you probably didn't spot it because I was going so fast, but there's a little trusted flag at the top, and it means that this decentralized app has been audited by a group, maybe a dozen of auditors that have ensured that the code indeed did what it said it would. Remember that all the code that's on the blockchain, imagine that's true for you guys as well, is completely open. Anybody can read it, anybody can see it's true, and the blockchain keeps it immutable, therefore it's always been that way and it hasn't changed. So from that perspective, I'm very confident today. From a perspective of smart contracts are more complex than just send money from A to B, well, not really. I mean, like Niki said, that stuff is 10 lines of code, 20 lines of code, 30 lines of code in some of our more complex smart contract. If you have a smart contract that takes 2,000 lines of code, you're probably doing something really wrong with the blockchain. That's not the way it was meant to be used. The other thing is, and I don't want to go into too much technicalities, but the virtual machine that executes the smart contract for Ethereum in particular is like 200 lines of code. And we're going to have a very big drive in getting the community, because again, it's all open source, to review that code, as well as professional companies, which will be announced and people will recognize them instantly. I think what is interesting about that question, though, is that who's asking today, what is the code that your bank runs? And look at what happened a couple of days ago.
Yeah, but it's instantiation of the code, right? You could have a race condition. You could do a review of the code.
We can't have race condition on a single-threaded program that runs on a blockchain.
Understood, but as an example, you could have a situation where certain transactional or programmatic constructs which constitute a contract cause an unforeseen issue, right?
They roll back.
Potentially.
No, they roll back.
But it's only if it throws an exception. But it's still going to execute. But it's not your money, right? if you're doing high value transactions.
I intend to use this stuff.
So for sure. But I mean, if you're a bank and you're doing trillions of dollars a day, you probably want at least some road testing of that service, right? So Bitcoin's been around 5 years.
But then that's a different question. Then that is a different question. The question is therefore. Okay.
So can I just rub one of your axia, which is that it's taken 5 years for Bitcoin to stabilize? I actually dispute that that's true. I think in technical terms, it's not taken anywhere near that long for Bitcoin to stabilize. The market has been very volatile and it's taken a long time, but actually there hasn't been any serious technical issue with Bitcoin for 3 or 4 years.
295 million transactions in the financial sector per day at the moment. I think it's 100,000 transactions in the Bitcoin network per day. How far can we go in terms of number of transactions on the network before slowing it down to an extent that is not, usable any longer?
So it's a question about Bitcoin? So.
Yeah, okay. Well, I mean, yes, Bitcoin is not able to replace the entire financial system tomorrow, sadly. But I think it's a very good alternative framework. and more importantly, a decentralized framework. And I'm not a Bitcoin developer, so I can't answer precisely, but there's a lot of discussion in the community about changing the block size, which the Bitcoin developers are looking at, in order to allow for a larger transaction volume. There's a lot of discussion about side chains, about doing small transactions and then putting them onto the blockchain at the end of the day. So yesterday we had a meetup here with Coinbase, which is one of the main wallets, and he put forward that they are creating effectively an internal market, if that makes sense, within Coinbase, where the transactions do not go over the blockchain, but effectively are sort of netted within the Coinbase system and then once a day put onto the blockchain effectively. So I think I don't have the technical solution today. We don't have it today, but then a lot of the Bitcoin protocol has developed as a result of improvement by the community and as a result of the open source process. And so I'd say I was pretty confident that the problem of scalability will be overcome in due course. Is it there yet? No, it isn't. But I think the framework will be very similar or the same.
Yeah, I don't think it's was ever designed to kind of. I think the Visa network transact 10,000 transactions per second, and Bitcoin's 7 transactions per second at the moment, which can be scaled up. But I think Satoshi himself said that it would be a settlement currency in effect, and there would be off-chain trusted transactions, or entities which looked after off-chain transactions during the day, and then these entities would actually settle between themselves, maybe in larger transactions, but obviously less frequent. And I think the technology that competes with Visa won't be Bitcoin itself, but it'll be related to Bitcoin and either on top of it or alongside of it.
I'd just add that there are other projects out there in the sort of wider crypto space that have, potentially alternative solutions to this Byzantine generals problem that was mentioned in the first bunch of slides. Stephan?
Yeah, so basically the idea is you don't use consensus technology to have two parties exchanging information during the initial step of the transaction, but then you use the consensus mechanism to store its settlement, which really reduce load. So you do a lot of stuff off-chain, and then you push it back in the chain for a recon process, basically. That's the strategy, as I understand it today, for most stuff. And remember, not everything needs to sit in the blockchain. There's a tendency to push everything into blockchains. You wouldn't put a video in the blockchain. You wouldn't put an MP3 file in the blockchain. You would use BitTorrent, and then you would reference that from a blockchain. And if you wanted to invalidate it, you just change the reference in the blockchain. That's the more logical approach to things, and also far more economical.
Yeah, I mean, little that. I mean, there's obviously people have a lot of faith in Moore's law continuing to allow us to deal with bigger blockchains and bigger blocks and so on. I mean, one of the debates I regularly get into is I don't think Bitcoin is decentralized the way most people do, because it's centralized around a blockchain. There's only one blockchain. You couldn't send a community to Mars and have them continue to use blocks or Bitcoin because they wouldn't be able to continue. You could with gold or with paper money and so on. So they're, ironically, by one definition, more decentralized. Well, yeah. So I mean, the question of moving things off chain, that it seems logical to me that the ecosystem will adapt to become as efficient as possible, and it seems reasonable to assume that will involve a lot of off-chain transactions. Yeah.
And one last thing is this idea of multi-chain. So especially in the context of proof of stake, there's people doing research on multiple proof of stake chains that are all intertwined using a thick client that recognize them all. So you could have application-specific chains, and they could all checkpoint back into a main chain for, say, identity. Vlad Zemfir is doing work on that right now in London. I think that's an interesting prospect, but it's not the technology today. It's the technology in, say, 2 years' time.
Is there any concern over regulatory scrutiny and how that might affect what you can and can't do in the future?
Concern from us or concern from the regulators? I mean, I think both to some extent. It depends on the jurisdiction. I think there's a lot of concern on our side to make sure that the regulatory structure doesn't stifle the industry, and therefore there's a distinction made between Bitcoin as a currency and blockchain as a technology. So that is made a lot. And I think that you can debate about Bitcoin as a currency and the ideology of it, but I think the blockchain is a very significant scientific advance. And so I think that I think regulators do recognise that. It depends on the jurisdiction. In the UK, the general feeling has been to be quite laissez-faire about it and even quite forward-thinking. The problem in the UK is the banks who hate it and won't open any business bank accounts for any Bitcoin business or anything that says Bitcoin at all. And so the banks are determined to squash it, but the regulators and the government are actually quite encouraging. In other jurisdictions, the situation is different. There's a lot of activity going on around regulation, and it's one thing that we're working on a lot in the UK Digital Currency Association, is engaging the regulators to explain the potential benefits of the technology and also to argue for a fair and reasonable regulatory regime that balances the interests of consumers and the interests of the emerging industry, as it were. So that we're arguing for sort of a proportionate regulatory response, which I'm hopeful that in the UK at least we will get.
Sorry. This sort of reminds me of the times when it was unlawful, at least in Germany, to connect any phone that wasn't authorized by Deutsche Telekom to the network. Yeah, we've overcome that successfully.
Exactly. Yes. And I mean, Skype and all of these things offered a similar sort of challenge in telecommunications to the sort of challenge that Bitcoin is offering in finance, effectively.
Yeah, I'd just like to add that, I mean, just the idea of the transparency from a regulator's perspective is quite a compelling one, especially, they weren't able to do the job as maybe they'd hoped they would be able to during the financial crisis, and the idea of transparency on blockchains is something which could improve our current systems. And things like multi-signature, which you've seen a lot of multi-signature stuff this year, so no single custodian of funds and shared ownership of funds is also quite a solid one for something that are interested in at the moment.
Okay.